Hello friends, welcome back. Now, let us discuss about the concept of liabilities. What are liabilities? Liabilities are basically the obligations of the company, which it should pay or oblige to meet soon, or on the long-term basis. These are basically the various amounts, which are due to the various institutions, corporates, or people outside the company, which includes A. The bank, B. The suppliers, C. Different kinds of service providers, etc. Let us understand the different types of liabilities. The first kind of liability is account payables. Let us say that someone supplies raw material to you on credit, and you should pay the supplier for it. This is account payable, which you should pay. The next type of liability is lease. Let us say you have taken land on a lease for 20 years, on which is the factory building, and you should pay the lease obligation every year. This is a long-term lease liability, which should be paid. Notes payables are the bill payables, which can be different kinds of services, which you have taken and should repay over the next 1 year or on a short-term period. Income tax payable. Let us say that you have an income tax liability, which should be paid over the next month or over the next 2 months. This is called the income tax. In some countries such as Singapore, you may have to pay income tax over 12 months, which is outstanding and should be paid over that period. Any amount which is due to the government as income tax is called the income tax payable. Long-term product warranty. Let us say that you deal with electronic items, and there is a warranty, which you should provide to the customers. Therefore, there is a liability which should be met. Let's say you are making a computer with a 3-year warranty. It is possible that out of the product sold, people might come back and ask you to replace the laptops or computers over the next 2 to 3 years, as per the warranty period. Any liability related to this is called a long-term product warranty. The next concept is long-term debt. Let us say that you are setting up a factory and have taken money for a period of 7 to 10 years to build the factory. It is called a long-term debt. Basically, any debt which is more than 1 year is considered a long-term debt. Salaries payable to the employees. The salary is due on the last day of the month, or on the first day of the next month. However, if we make the payment after 2, 3, or 4 days, the outstanding amount is called salary payable. The next concept is the current portion of long-term debt. The current portion of long-term debt is the debt, which should be paid over the next 1 year. Although the debt is long-term, its instalment or principal that should be paid within 1 year is called the current portion of the long-term debt. Pension obligation. In many countries, the employer should contribute to the pension of the employees. It is partly deducted from the salary of the employee and is partly paid by the employer. Any money that is deducted here by the employer for making payment to the government will be from the employer's portion of the money, or is deposited in a pension account called a pension obligation. These are the different kinds of liabilities. However, there are various other kinds of liabilities in the financial world. Let us now understand how to break the entire liability group into the current and non-current liabilities. What are current liabilities? Current liabilities are those liabilities which should be repaid within a year. Let us take the example of suppliers. Let us say that you have taken goods and raw materials from the supplier for which you should make payment over the next 2 to 3 months. This is called accounts payable. As discussed earlier, the salary should be paid to the employees. Notes and other bank debts can be any kind of bank debts or notes in terms of bills payable, or any negotiable instrument, which you have taken and should be repaid. As discussed earlier, the current position of the debt is due within the 12 months. Which are called the current liabilities. Non-current liabilities are those that are not to be paid during the current financial year. This is the only difference. If we take some equipment or building on a long-term lease, let us say for 5 to 10 years, we should make the payment because it is a fixed liability. We have already discussed long-term product liability, such as the repairs of laptops. Notes payable and long-term debt are anything which are payable or can be any kind of loans, which should be paid beyond 1 year. These will come under long-term debt. The pension obligations of the employees can be under current liabilities. Friends, Just remember, there are many more items in current liabilities, which we have not been discussed, such as rent payables, which includes interest payable and is like any other kind of liabilities, which is due to various people. I hope you've enjoyed this session. See you soon in the next video. In case you have any questions, queries or doubts, feel free to send us an email or connect with us. Thank you friends, and have a nice day.